Welcome to our panel, Bootstrapping to Big Bucks. We have two incredible investors who are here with us today who are going to share just a wealth of experience and resources and tips for all of you who are watching today. If you have any questions for us during the live stream, please tweet them using the hashtag FundWomenStartups. Also, the live stream is very filled today, and so we would love for you to tweet the discussion using the hashtag so that we can share as many resources as possible with as many people. So I wanted to introduce our panelists and give you a little bit about their background. We'll start with Kate, who is an investor and the director of Galvanize Ventures. Kate, can you tell us a bit about your background and some of the things that you're working on right now that you are really excited about in the startup world?
Sure. So I have an interesting background when it comes to venture capital. I didn't do the traditional route, which is usually business school or even maybe finance or even being a technologist. I was an English major at Middlebury. I don't have a bachelor's degree. Or sorry, I do have a bachelor's, don't have a master's degree. I actually was working at Martha Stewart as Martha's assistant for a number of years, and I actually briefly worked under Susan Lyne, which was so cool. And I have an interesting story which I was reminded of this morning. I was temping for Susan for about a week. I was probably 25,
baby, yes.
Maybe 25. I was new to New York. It'd been a couple months at the company, and I didn't know Susan very well, but I knew of her as the president, and hellos and things like that in the hallway. But working with her gave me a really great opportunity to see the company from the bird's eye view and what she was working on every day, which was really intriguing to me. And at the end of my week, I'd walked into her office, and I was so inspired with the way that she conducted herself throughout the company, and I just kind of blurted out as a thank you, and I said, I want to be you when I grow up, and just kind of asking for general advice.
Right.
And I think at that point I'd been towards the end of my experience at Martha, and I was actually coming to her for advice on how to bow out gracefully from my position without burning any bridges, and she gave me some amazing advice, which it was tricky. My family didn't want me to leave, but I felt like there was more out there for me to go learn.
Sure.
And she was wonderful in terms of just giving me some, tips on how to do it correctly without. And Martha and I are still friendly today, so it was helpful.
That's awesome.
And then I went to go work for Kenny Lear, who at the time was starting a little news website called the Huffington Post, which was, I would think I was number 40 at the time employee. I wasn't working with the Huffington Post team. I was actually working out of BetaWorks, which is now a well-known incubator in New York. At the time, Andy Weissman and John Borthwick were just starting, and it was about 4 engineers in a room in the meatpacking district. And Kenny had an office, but I don't think any of us, at least Kenny and I, weren't really sure what we were going to do every day.
And you were like one of the only women.
Yes.
Right?
It was, like I said, about 4 or 5 engineers. There was one woman who was, the admin for the location, but there wasn't any women engineers. There wasn't, there wasn't much there at all. So I was really one of the first few. And we were just looking for cool stuff. That was pretty much how it was every day. We'd come in and we'd take meetings depending on who had sort of reached out. And this was back in early 2009, end of 2008.
Okay.
So if you remember, the market was in a really not so great place. So the tech innovation actually coming out of that was really inspiring. People were getting a lot of creative ideas because everyone was feeling a lot of pressure in terms of whether it was personal or business or whatever. Sure. And so we were just looking at small companies, and Ken was doing angel investments whilst being CEO, chairman of the Huffington Post and chairman of BetaWorks, and then a small company called BuzzFeed, which was starting at the time that Jonah was working on. So it was cool to see those early meetings as well, that Jonah's creativity just kind of coming out of the woodwork, and cats being thrown around, and things like that. We were looking for small ideas, and so Ken was making early angel investments, and part of my role was to just find cool stuff, which is what he had sort of instructed me to do. And my first investment for him was paperless posts, which was really cool, and that actually tied in really well to what I had learned at Martha Stewart, in terms of what would female consumers be interested in, and the way that Paperless Post had a unique perspective of translating what they wanted to on the web, right? Instead of handwritten correspondence, how is it going to look as an extension of themselves?
Right.
And then we'd started, that year went by, we did a couple small investments, a Bitly engineer. We were doing Bitly at BetaWorks, and then an engineer was looking to start a small payments company, mobile payments company, which then is now Venmo. And Andrew Cortina and I would go to lunch often and just think about names and things like that.
Right.
And so that, in 2010, we started a fund, Ken and Ben did, and it was a small fund, $8.5 million. But that was mostly just to strategically invest in things that we were seeing in those spaces, what Ben was coming across at Thrillist, and what we were learning from Huffington Post in terms of content, and then what the technologies were developing at BetaWorks. There was no plan for it to become Lyra Ventures. I think if you would ask Ken and Ben now what their plan was in the beginning, it was more just to see the opportunities that were around. And yeah, I mean, I don't think anyone could have guessed what it would have turned into.
And now they're on their fourth fund, yes?
Yeah, absolutely. They're doing amazing. And so I recently left a year ago after the third fund. Did 3 funds with them. We'd scaled up the company to, I think it was 11 employees when I left. And at one point I was managing 21 entities. We were also operating our own startups, like Now This News, in-house, and Rebel Mouse and things like that. Which are all New York startups, and over 200 investments, which was
that's amazing.
Which was incredible, really incredible for the short period of time that we were at it. And Ken and Ben and Eric and Jordan really did a great job in terms of building that brand. It was just amazing to sit there and watch and help. I mean, I got great operating experience under that time period.
And now you're at Galvanize Ventures.
Yep. And so I left about a year ago now to start a new fund called Galvanize Ventures. There's there's Galvanize, the actual startup, right? So it's kind of cool where I have a startup and a fund, which is kind of what I was doing at Lyra as well. That was sort of the impetus and what I was interested in terms of continuing to have my foot in an operating role a little bit, and still feel like I'm attached to venture and early stage seed investing, which is what we're doing now. We're writing checks about 50 to 100,000. Our fund is 10.2 million, and we've been really active in 38 investments in the past year.
That's great.
Yeah, and our portfolio is 17.5% female,
Woohoo!
which is awesome. And I would say that that's not just because I'm out seeking women. I think my partners are also really open to it, and as they were at Lyra. I think Lyra was at one point like 18% female in their portfolio with 200 investments, so that's also a great number.
It's about 3 times the average.
Right, yeah. And so I think that having a team that's incredibly supportive and understanding, and at Lyra we had a ton of women working there, and they would help evaluate those investments. It wasn't just about what the senior partners were looking at.
Good. Susan, you have a tremendous background as well. Could you tell us a little bit about, right now I know that you are heading up BBG Ventures, which exclusively funds women-led startups. It's so exciting to see, and that is within AOL. So can you tell us a little bit about your background and just what is really exciting you these days?
Sure, absolutely. I've been working for many decades now. In fact, I didn't get a computer until my 3rd job, so that tells you how long I've been doing this. I started out in media businesses, magazines, and then television, and was at ABC for, close to a decade, and then went to the Martha Stewart Company, where I met Kate, and she was a rock star even then. But it really wasn't until 2008 when I was approached about coming to Gilt. They were just beginning to scale. The company had launched in December 2007, and I was approached by the VC who had put the first money into it to see whether I'd be interested in coming in as the CEO, and it was such an interesting business model and moment because they were just completely disrupting e-commerce. The idea of appointment shopping and limited quantities of goods and great brands at great prices, and invitation only, so that it became, a big deal to be able to get an invitation. The week-over-week growth and the customer love was just something I had never seen before. It was extraordinary, and I've worked for many beloved brands.
Yeah.
So I jumped in, and while I was there, I also met an awful lot of the young women who were starting companies. I started a breakfast that we used to do quarterly. Now we do it twice a year for young women entrepreneurs. And initially, it was people like Alexa Hirschfeld from Paperless Post and the Jennies from Rent the Runway and Birchbox and obviously 2 of the founders of Gilt were female.
Yeah.
So it was really fun, and it was a way for us to sort of exchange what we were seeing and to support the whole idea of getting more women involved in tech.
Yeah.
So I went to AOL in 2013, the start of 2013. At that time, I was going to start this venture fund, and Tim convinced me to come over to run the brand group, but it was a delayed concept that finally came to fruition when AOL agreed to be the limited partner for this first fund, and we're a $10 million seed fund. We invest only in women-led tech startups. There has to be at least one female founder. Most of our teams are, in fact, mixed teams, which I think is the best way to go. But we looked at the landscape, and you've talked about the statistics, which are terrible, but I look at it, too, as a really great opportunity. Because if 94% of the venture investment is going to 50% of the population, then there's a huge opportunity focusing on the other 50%.
Absolutely. And there's so much opportunity to make a lot of money.
Yes. That's my point. Yes, exactly. So we launched on September 3rd, and we've made 10 investments thus far. We're just diligencing our 11th. I have a partner in this, Nishidua, and it's a very flat organization. We see every company we are evaluating. There's no team below us who is doing the screening, and we're focused on consumer internet. That's the area where I feel like I know the best, where I can add value, and where we can bring more than just dollars to the table.
Right. Great. So I'll quickly introduce myself. I'm Allyson Kapin. I am the founder of Women Who Tech and RAD campaign. And as Susan had alluded to earlier, only 7% of investor money goes to women-led startups. And that is such a sad statistic, and I really think there is no reason for it, because I'm seeing an incredible rise of women-led startups. And I really want to crush that stat. And one of the things that we are doing at Women Who Tech is we have launched the Women Who Tech Telesummit, and our newest initiative is the Women Startup Challenge that we are doing in partnership with Craig Newmark of Craigslist and Craig Connects. And we are launching a startup crowdfunding competition where women-led startups will be raising money for their ventures using the platform Crowdrise. And then we're going to take the 10 best startups, and there we're going to invite them to General Assembly in DC in June to pitch their startups to investors, where they will be able to win up to $50,000 and startup-friendly services. And you can learn more about that at womenwhotech.com. And this actually segues really well into what I want to talk about next, which is something that we're experiencing in the Women's Startup Challenge is a couple of the entries, while very exciting, they're not necessarily startups. They feel more like small businesses or medium-sized businesses that wouldn't go out for venture funding. And so, Susan, I know that you see these pitches all of the time, and you experienced it yourself. And so I know that we also have a lot of people on the live stream who are also trying to figure out am I really a startup that can go out for venture funding, or am I really a small business? Because I think the word startup has become such a buzzword. Everybody wants to be a startup, but not everybody is. So can you tell us the distinction?
And I actually think that's a sad state, because having a great small business is fantastic.
Absolutely.
And not everything is built for venture funding.
Right.
And I fear that too many people feel like it's a badge of honor to get venture funding instead of that I need it. Right. So I would say two things are the filters that I look for. Is there actually a technology advantage here? Are they using technology in order to build a business, and as a result of that, do they actually have the ability to scale more quickly, better, compete better in that marketplace?
Right.
And the second thing is really, are they doing something that is highly disruptive to some traditional business model? So that's another way, another reason you can imagine that this would scale more quickly and more dramatically than a typical small business. And that's why you put venture money in. Venture money is risky money.
Right.
So you are looking for businesses that have a big enough market, and a great idea that could, in success, become very big companies. And so that's
great.
That's the filters I use.
So Warby Parker, for example.
Yeah. It's a very good example.
Yeah, so that, can you tell us a little bit about why they're definitely a startup versus...
Yeah, absolutely. Yeah. And I think they actually fall into both of those categories. So what I think they realized, they did a lot of really good homework into the whole eyeglass industry and the supply chain, and figured out where value was being lost at every point, and they blew it up. And as a result of that, they were able to capture value that was lost along the way, and were able to offer glasses at 15% of what you would have to spend going into a typical optical store. At the same time, they were also using some very cool technology to allow you to try on glasses online and to really play. And they were, at the outset, online only. So the idea of being able to just put your prescription in and suddenly get a pair of glasses in the mail was awesome.
And they weren't just an e-commerce site.
No, not at all.
And
They were
it's a huge distinction.
They were a tech-driven supply chain operation that continues to get better and better, and we're also bringing new technology to consumers with some of the try-on stuff.
So Kate, what are your thoughts on this? Because it's not like being a small or medium-sized business versus a startup is a bad thing. It has so many pros. You own 100% of the business. It can be highly lucrative. Tell me a little bit about your thoughts on this.
Yeah, I would agree with all that. I think it's getting a little bit of a bad rap, and like Susan said, it's trendy right now to raise venture capital. And I think that entrepreneurs need to understand what that means when they're asking for VC money. This is something that you're taking dilutive capital so that you will not own 100% of your business, which is what we were talking about. If I were on the other side of the table, in building my own startup or building my own business, I would try to keep 100% as long as possible. I have friends in New York who have started successful businesses that aren't taking any venture capital, and they're working out just fine. And I think there's also a lot of other opportunities to have supportive capital, such as crowdfunding, non-equity dilutive crowdfunding. There's also equity dilutive. And then there's also venture banks are offering venture loans, venture debt. Those are strong solutions as well that continue to keep you at the owner stake. And these are things that aren't talked about as much because we're feeling that venture right now, I think in the media, is so hyped up. I mean, we have TV shows about it. It's certainly exciting to say that you've been through the fundraising process, but that fundraising process is long. It's arduous. You have to take meetings after meetings.
It's grueling.
Yeah, and investors will give you feedback, hopefully, right? You should certainly be asking for feedback if they're turning you down. And saying, what can I do? What numbers you need me to hit? Where am I at? What's wrong? Where do you feel like this business is lacking? Because that feedback's super valuable. But those are days, months, weeks away from your business.
That's right.
And you have to think long and hard about, is this a business that I want to be in with another venture team for 7 to 10 years? Or is this just something I want to keep at a manageable size for me and my employees, and it can be profitable, and I don't have to deal with writing investor reports and all those things that come with it.
Right.
So I think learning about what the venture process means for your business is super important.
So I know a lot of women who are watching the live stream today, they have either just launched their startup or they've launched their startup and they have a product and they're interested in going out for investor money. But how long should they, and you alluded to this earlier, how long should they be bootstrapping for before they go out for that investor money? What kind of traction are you looking for? What kind of results as investors are you looking for before you begin to meet with a startup and consider that type of investing?
Yeah. I think there's a lot to be said for waiting as long as you can. We believe very strongly that we need to see a product in order to invest. We do not invest in ideas. We do not invest when a product is in process. Now, we are doing consumer internet, so that's a different business than maybe enterprise.
Sure.
But we want to see a product that has launched.
Okay.
It can have launched in closed beta, as long as you can show me some evidence that consumers like the product, right? This is not something where you think people are going to like it, but where you can demonstrate they like it, either because they're engaging with it more frequently day by day, or because they're telling their friends and there's a wait list to get into the closed beta. But show me metrics that give me confidence that what you've built, consumers love.
Okay. Kate, what kind of metrics are you looking for when you are hearing these pitches? Should the product have launched for, say 6 months and you're measuring metrics that way, or is there some other type of impact that you are looking for when you're evaluating whether you're going to invest?
There's a couple different types of businesses that we look at. I look at consumer, we look at enterprise, we look at several different types. So you can't have the same rules for every type of business. Hardware, for instance, is something that we were talking about. It takes a really long time to see the actual product, to hold it in your hand, to test it. So oftentimes we might see a prototype. There might be a wait list. There might be some sort of crowdfunding money that they've raised. We have several hardware companies in the Galvanize Venture portfolio, and it's a little harder to get your mind around that, because that hardware process of building out and coming to ship dates, there's a lot that can go wrong, and it takes quite a while to get through the manufacturing process. So that's something that I would say that I'm used to now at this point, in terms of expectations as an investor.
Right.
I certainly would love to have seen the product in hand beforehand, but sometimes it's not how it works.
Right.
And I think if you're building a business that, if it's revenue generating, right? If you're selling a service or a product, whether it's tangible or a service,
right?
You want to show that that your customer base is using your product again and again. And what does that churn look like? How much does it cost to acquire those customers? Have you used any marketing? I'd like to see some of those channels played out a little bit, so that you're already starting to see what's working and what's not.
Okay.
I often say that when you're starting a business, it won't look anything like what you thought it would in the first early days.
Right.
So it's very hard to sit here across the table and say to investors, I promise you it's going to be just like this on paper, because it never is.
Right.
And when you get through the process, you learn so much along the way. And so part of that process is we're hoping you as a founder can figure some things out and come to us with your learnings. And I would say be completely honest and say, look, this isn't working, but this is. This is really more impressive than I ever thought. But I'm working on fixing these areas that I wasn't anticipating being a little more difficult. So finding that happy balance where you can show some of the early findings and say, look, here's
so
now what I built.
you want to hear about some of those challenges
Absolutely,
that they've been experiencing.
absolutely. And I think being honest with your investors from day one is you're building a relationship.
Right.
So yes, you want to put your best foot forward, but if your best foot means omitting a lot of things that they're going to find out about later, then that's not a position you want to put yourself or your business in. You don't want to have any surprises. It's much better to put that stuff out in front, because chances are they might be able to help you.
Yeah.
So if you ask for help and you show those areas that are weak, I think that's okay. I mean, at least in the early stage, you're looking for advice as much as you're looking for capital.
Right. So you raised a really good point about building relationships with investors, and I want to talk about that. So if your startup is ready to start scaling and you need this investor money, how do you go about finding the right investors who are investing in your area and building those relationships with them and finding those niches? When I talk to a lot of women-led startups, this is actually one of the biggest challenges, where they're like, we have this great product, we've launched it, we're seeing traction, but we aren't connected to enough investors to get to that next level. And I always say, well, are you networking with the investor community?
Yeah.
But then I also think that investors also need to do a better job of networking with particularly women-led startups. So I think it's a two-way street. So Susan, what are your thoughts on this? And do you have specific resources? Of course, there's AngelList out there that startups can be researching. But what other resources can people who are watching the live stream today tap into?
Well, I think you hit on one thing that I think is really important, which is to figure out where people are going to be, right? You can look at all the conferences that are out there and the meetups that are being written about or announced, and make sure that you are getting to enough of them.
Right.
I moderated a panel at Joanne Wilson's Weave Festival in January. I must have met, 50 people who followed up with me afterwards, because they specifically knew I was going to be there.
Right.
And they figured out how they were going to stop me in the hallway or manage to have a conversation when they sit down next to me at a table. And that's just being proactive and smart,
Exactly.
right? The other thing I would say is that you just have to do research on the VCs you are going to talk to, and that can take lots of different forms. It can be going to things like Crunchbase and Mattermark and trying to find companies that look kind of like yours, not too close to yours, but certainly in the same arena, to see who funded them. You can go on to VC websites. Many of them will tell you what their areas of focus are. Absolutely. And if they don't, on that landing page, if you go deeper into the team pages and you look at what those team members have invested in, you can see a pattern. You know Absolutely. What they are interested in. I would also try to look at the things they've invested in most recently, because most VCs who've been doing this for a period of time may have been focused in one area for 5 years or 7 years and come around to a different thesis or seen a new opportunity and have moved on to something new. But you got to spend a lot of time figuring out who the right people are to approach, because otherwise, one, you're going to just hear an awful lot of no's, and secondly, you're not going to look very smart to the people you're approaching.
Because you clearly didn't do your research.
Yeah, absolutely.
So Kate, I know you have this great philosophy that you feel that startups should be networking with investors before they actually ask for money. And I know you shared this great story with me about Lala, who had emailed you very early on in their startup, not asking you for money, and it was a cold email, I believe, on LinkedIn, and just was so passionate about what they were doing and what you were doing, and they really just came to you for strategic advice. And it's been, I think, 2 or 3 years, and you all are still talking. And can you tell us a little bit about your philosophy on why that is so important for startups to be doing that type of networking?
I think a lot of VCs have talked about startups having to raise money like venture capitalists. That's, I think, the thing that's forgotten about is that I have to go out and fundraise as well. It's not fun. And you want to find the right partners that believe in your fund just as much as you want to find the right partners that believe in your startup. So it's a similar process of research, doing your homework. If you're banging down the door of someone who just doesn't get it, then why are you wasting your time doing it? It's not good for either party. So I do think, and to Susan's point, there are a lot of funds that are posting blog posts about why they're investing in certain startups and what got them to that point and why they like the company. That gives you further insight into a little bit more detail of why they're making the decisions that they're making, especially, for timing. So if you can form relationships earlier before you need the capital, I think that's very, very smart. I actually had one of the companies in my portfolio call me about a month ago, and he had said exactly that. Who should I be meeting now for 8 months from now that I want to know? And
it's a great question.
It's a great question, and I was so happy that was how he was approaching it, because and this wasn't his first startup, so he did this before. But it was very intelligent, and I'm trying to remind my other portfolio companies to do the same sort of thing, because I think we all sort of know that inherently, but it's hard to remind yourself of that. So the girls from the Lala, it was great. They had sent me an cold email. They didn't have a warm intro. I do say that if you can get a warm intro, that's even better. If you can get to a portfolio company in their portfolio, that's probably great. My partners and I take those intros very seriously. We love them.
Totally agree.
Because they understand, and they're going to make it based on what they understand is here for those investments. They sent me a cold email. It was wonderful, and they said exactly that. We don't know what we don't know. We're in college. They were building a startup content company for girls in college. I was at Lear at the time, and they had said something to the effect of, we didn't think anyone else would answer our email, which is totally not true, because everyone at the company would have. But for whatever reason, they thought I would be a sympathetic ear, and I certainly was. And I enjoyed meeting them. I was so impressed with how much they had built already in their dorm rooms. It was crazy. I mean, I wasn't doing anything like that when I was in college. And they just were sponges. They took a lot of notes, and they went and read books that I gave them to read. They read blogs. They made friends with people. They 2 years later, they're still working on their business. We had a meeting the other day, and it was more of just a brainstorming session. They said, I think we're ready.
And they still haven't raised money.
And they still haven't raised money, which is crucial. They have, I think, one advisor who gave them a tiny little bit of capital, but they own the majority of their business, and it's functioning just fine. So they're now thinking of terms of scale, which I think is really smart. So instead of banging their heads against, the wall at, right out of college, they just went to work, which I think is really important. And they researched, and they got to know the New York investing community over time, and they're in a much better position a couple months later, than having to put a lot of pressure on themselves to do something when they weren't ready.
No, I love that story. I think it's great. So we have a question from someone on Twitter. Their question is, would a pilot be applicable for proof of concept? And what are your thoughts on that?
So I think pilots are great, and I see pilots very frequently. In fact, there's a medical technology company we are looking at right now that has built a very strong case based on pilots they've done with various hospitals and and doctor bases.
Mm-hmm.
I think that's great as long as the pilot will pass the smell test, right?
Yes.
If you have set up the pilot in such a way that it's fair and where you can defend the results and they are clearly something that if you did scale it should continue to be the case,
Mm-hmm.
then absolutely I think that's an excellent way to start.
Do you have any thoughts on that?
Yeah, I would agree the same. There's a couple companies that we had invested in, again, hardware companies that in lieu of showing us a product, they were
Right.
showing early prototyping pilots with a couple name brand companies, which then indicated that those would probably be annual cyclical, relationships
Okay.
over time. And that was helpful for us to get comfortable around an idea where we really couldn't see the product in consumers' hands yet. And that was a company that had both a consumer and enterprise
Right.
opportunity. I wouldn't say that one pilot would be worth enough for me to invest. I think
Okay.
that I would like to see evidence of, okay, here's one, and then we're also trying to do a couple more, or I think it's a good start in the right direction, but I wouldn't say that that's the only thing that
Right.
I would invest upon having that.
So you would want to definitely see not just one pilot, but possibly multiple pilots for
Or
you
just
to.
You're proving out channels of your
Mhm.
business, right?
Right.
That can be successful over time. And maybe pilots are the beginning of relationships where those can be reoccurring over time,
Okay.
right? And so if you can have a few of those relationships,
Right.
that's stronger than one.
Mhm. That makes sense. So I want to talk a little bit about crowdfunding as an alternative source of funding. What are your thoughts on crowdfunding, which actually are quite popular among women startups? So Indiegogo released some stats within the last year that about 50% of the startups raising money on the platform are women. And I also believe that a lot of the donors are women as well. So I see this as a huge opportunity for women-led startups, and is one of the reasons that we're also using crowdfunding as a competition in the Startup Challenge. Interestingly, a couple of weeks ago, the SEC came out with a new ruling that says startups can now legally offer equity via crowdfunding, whereas before, while that was happening, it wasn't necessarily legal, but now it is. And I'm curious what your thoughts are on that. Is that exciting? Is it worrisome? Is it a bit of a hybrid? Because you used to have to be an accredited investor to actually take funding, and now the rules seem to be
And I think you still have
changing.
to be an accredited investor. They've just expanded what
The
Yeah.
accredited.
Yeah,
what that means.
right. Which is a much lower threshold now.
Exactly.
Yes.
Yeah. So I think crowdfunding in general is great for certain kinds of things, for consumer products, for hardware, for
Right.
example, there's been a lot of success there. In fact, our one hardware investment, a company called Gotenna, that has created a product that allows you to communicate and send texts when there's no wireless, no cell coverage, no nothing.
Right.
And it's a great product. They used crowdfunding largely to get word out about what they were doing, and I think that's one of the great values of crowdfunding is that it's a marketing tool. It tells the world what you're building in advance of your product. But there's a lot of different kinds of businesses that don't necessarily work terribly well for crowdfunding. The crowdfunding of equity investment,
Yes.
which is a different thing,
Right.
right? Actually, AlphaWorks has started, which is an extension of BetaWorks
Okay.
that allows a venture fund that is backing a company to offer a portion of that equity to individual investors through AlphaWorks.
Okay.
So it's exactly what you're talking
Right.
about.
Right.
And I think it's only been up and running for maybe 6 months, but I think it's already proved that there is a market out there. There are a lot of accredited investors who would love to have the opportunity to invest alongside venture funds. They may not have $100,000 or $250,000 to put into a fund, but they may be willing to put $1,000 or $5,000 into an investment, and having a venture fund, knowing that a venture fund who has done due diligence on this has decided to put their own money into it, gives them comfort that in fact this is not just something that sounds good, but it's probably a decent investment for me. There's always risk in venture investments, and I think that's where the concern comes in. You know, do people think that this is an easy way to make, you know, a 2x, a 5x return, and they don't understand that the vast majority of these don't deliver. But I think it's going to take time to both educate that group of people, and there will be missteps, and there will be people who are really unhappy about the investment they made. But for that reason, I think making sure you are doing it on a platform that that makes it very clear what the risks are. So I would not try to do that on your own website. I would do it through a smart platform that has been built for that purpose.
Do you worry on the crowdfunding sites that have begun to take equity? Do you worry that the startups, for instance, like when they work with you or when they work with Galvanize Ventures, there is this relationship, this personal relationship that's been built, because you're not just investing in the startup, you're investing in the founders. And so I worry about, even though I'm a huge advocate of crowdfunding, I worry about that side, because you're not just getting money, you're getting resources and mentorship and introductions. And so is that going to be missing from this side because of the crowdfunding, and that basically anybody can join this?
So I would say that if you're thinking about crowdfunding your entire startup forever, that's probably not a good route to take. Usually crowdfunding is something you do pretty early on.
But it's the equity part that worries me.
I understand. I think the danger is that when people are unhappy, they make it known, right? So you can have a backlash. There's no question about that. We've all seen it, right? And if you have an angry enough investor, they can decide to go to social media and try to destroy your business. Now, that's not what usually happens, but I think just as you have to make investors aware of what the risks are using crowdfunding, you have to be aware of it as an entrepreneur too. That when you have a group of investors who go into this with great expectations, if the product is late, if the product isn't perfect, there can be many reasons for them to decide, hey, this isn't what I bought into.
Yeah, I worry about that too. It's an early solution right now, and I think that a combination of both crowdfunding and venture money, if you can swing it, would be a great idea. There's a company, actually a female-founded company called HipCamp that we invested in, and we actually founded on AngelList. My partner did. And that was an amazing find. We wouldn't have probably had a direct intro to Alyssa maybe otherwise, or would have necessarily known the timing of it. And that was obviously through AngelList, through equity. And she was clear with us on how long the process took to close the deal, which is something that, again, it's time away from your business. But she has a very diverse investor pool. And sometimes those individuals who feel that their personal, that $10,000 that they put to work, they're going to work so much harder for you because the $10,000 to them matters in a very big way.
Right.
And maybe sometimes a small check from a large VC who's got a huge portfolio may or may not, even though those relationships are there, you're probably having to bang on that door quite a bit to get those, right?
Not as much of a priority.
Right. Yeah. So it could go either way. And I think we just kind of have to watch and see how this is received on both ends. And I will say, if it were my business, I would want to know my investors as well as possible. Yeah. And not to say that you couldn't form relationships with them if it's a crowdfunding thing. I think you absolutely can. But it's how much you as a founder are going to inspire and involve your investors too. Right. Maybe just because they found you on a crowdfunding platform is the entry point, right? But then how much are you going to engage them over the course of the life cycle of your relationship with them? And I think that's on you as an entrepreneur. Right. And I haven't seen a lot of good examples of that yet because we're so early days.
Right. Okay. Great. So I want to talk about the in-person pitch because I think that is so critical. I think that this is practically like your make or break moment where you come in and you sit down and you do your pitch in front of investors. And I want to know, what are the most important things that you all want to see conveyed in that in-person pitch? And Susan, let's talk with you. I know that you have talked about this delicate balance between wanting to know a lot of information, but also not too much. And so what is that delicate balance that you are looking for startups to achieve when they come in and pitch with you?
Yeah, I would start with the fact that I'm going to be assessing you. That's the first thing here. Before I even start thinking about what your company is, what your business is, I want to know that I have confidence in you, and that I want to spend a lot of time with you over the next 3 to 7 years.
That you like me.
Exactly. And like is maybe not quite the right word, but that I'm engaged by you. I believe that you can do this. So that's the piece of it that that has nothing to do with your presentation. It really has to do with how you connect with the person on the other side of the table. And, it's a combination of energy and calm. And I know that sounds crazy, but but it is, you want both. You don't want someone who seems really jacked up, and you don't want someone who seems too laid back about the whole thing and like it would be really great if I could do this, but you don't want that.
Right.
Then I think paring back your story. So everybody builds a deck that is incredibly comprehensive, and I think you need somebody to help you to pull stuff out of it. It's like editing, right? Yeah. You just have to get down to the actual narrative story you want to tell, and what are the supporting pieces of that, and leave everything. You may have 100 different things you think are amazing about this business. You can put them into an appendix. You can have them ready if somebody needs or
more information
or asks that question. But really being able to stay on a clean story when you're first meeting with someone, I think is really important.
How long do you spend in those pitches?
We schedule 45 minutes, and we usually end up spending a little bit more than that. Okay. It's very rare that it actually works out to be exactly 45 minutes. So we leave a 15-minute window on the other end that it does not, we don't end up backing people up. But yeah, I feel like I need more than 30 minutes to really be able to ask questions and to get a sense of what someone's built.
Okay. Kate, how about you? What are you looking for in that pitch that is going to help persuade you to want to invest in that startup?
I would say being a woman in venture, I probably see the intros that I get for companies are women in e-commerce almost every day. And I love it. I could look at those businesses all the time. They excite me. I probably would be a customer in most cases. And that begs the question, is this a venture-backable business, which is what I see often. I do get excited about things that I don't know anything about. And we've invested in a lot of sort of off the beaten path categories. We've done some Bitcoin, we've done a space deal, we've done consumer, we've done content, we've done SaaS, hardware. And so I think what makes me tick personally is someone bringing me something that I never thought I'd be exploring that area. And that's just because I'm curious. I don't know that works for everyone, but I'm thinking of a woman, Felicia, recently brought a company to me called Binti. And the adoption.
Really interesting.
Yeah, really interesting. And it was something that we ended up passing on, but it stayed with me for days in my head. I thought about it, I was curious about it, I started asking friends questions. I still did research on my own, which I would say was an indication that it could have been something great for our portfolio. And it's things like that where I'd like to, it's a little bit like gym class, like run to the open spaces. But that's just me personally. I'd say if I'm looking at a pitch deck, I focus a lot on the page because we're looking at every sort of opportunity. We're very opportunistic at Galvanize. So if someone's bringing me a company in a new area that I know little about, I'd like to see a very in-depth competition analysis. And that, of course, is usually given to me at the high level of these large companies, and they're the small company coming up. I can't go to Mattermark. I can't go to DataFox and look up your company just yet because there's probably no information out there about you. I want to know who else in your opportunity are also coming up alongside you within a year, within 2 years. And I want the data to be honest. And I think oftentimes you get so in tune with what you're building and you feel like nothing is really competitive because you're looking at small nuances. Well, investors don't look at it things like that. Especially if you're looking at an opportunistic fund like mine, if you're even close enough, I'm considering you a first cousin competition. So I'd like to see a in-depth analysis of the competitive landscape, if possible.
Yep, absolutely. So we are moving into Q&A. We have 5 minutes left.
Can I
absolutely.
just add one thing? Because someone said something to me early on when we were starting BBG Ventures that really stuck with me, and that was that whenever he meets with a company now, he is also looking at, can they raise their A round, right? Is this a team and is this a presentation that is going to be able to get the attention and the support of people who are willing to put in $10 million? And so I think that because A rounds have become so much more difficult to raise, there's more money for seed, there's plenty of money out there for B and C and D rounds, but A rounds are hard. And that's why you see so many bridge rounds from people. So I do think that's another filter that is going to become increasingly important to people. Is this a founder who is going to be able to raise an A round?
That's really good insight. So we have just about 4 minutes left. So I want to do some rapid fire questions from, we got a lot of questions from our live stream audience today. Krogan asks, can you talk about terms of VC lending? What type of interest rates? How long term of a loan? And most importantly, what happens if it fails? And I think those are good questions.
So I think each VC approaches deals differently, right? There's at Galvanize, we try to set our investments either at initial $50,000 or $100,000 initial investments, and then it'll probably stay that way for quite some time. The terms are always different, I'm not leading rounds, so I don't necessarily dictate those terms, and I don't want to at this stage.
Any averages that you're seeing?
I'm seeing a lot of convertible notes. If I can see something underneath a $5 million cap, I'm so stoked. We're seeing things all the way up to $15 million valuations for pre-product ideas, and it baffles me.
Yeah.
And so the typical note that I see is a $5 million cap, 20% discount into a preferred priced, round, and then maybe 5% interest. And that note usually vests at 12 to 16 months, depending on the structure. And I'd say that that's pretty common, but
Perfect.
without knowing what your idea is at all.
Yep. Great. Susan, there is a question for you. How can they apply to BBG Fund?
So they can send an email to BBG Ventures at teamaol.com, and that is one way to get to us.
Okay.
We will have a website up within another 30, 45 days. We did not do it initially because I wanted to have a portfolio that we could point to before we put a website up there, and I think we have enough investments now that we can tell a story and we can help people understand the kinds of things we're looking for.
Great.
And look, you can always find me on Twitter or any number of places, and you can leave me a message, and I do try to get back to everybody. Sometimes it is particularly hard when I do something like this. If word goes out like that, so
you're about to be hit up.
So have patience. And the best way to get to me is to go through one of our portfolio companies, because if an entrepreneur we've invested in says this person is actually doing something interesting, we will always set up a meeting.
Wonderful. One last question from Jill Brown. What if your plan is to start as a free service like TripAdvisor or Yelp? The revenue is ad-based, and you're not really going to necessarily, she says, see that in beta. Any advice for that?
Yeah, and I would say I don't think about revenue for a business like that for a long time.
Right.
I look at Pinterest and think it's one of the most beautiful businesses in the world, and they still don't have a revenue stream that is really highly defined. It's still being tested. But what they do have is a huge, highly engaged audience that continues to grow and continues to use the platform for more things.
Yeah.
That's all you
need. It's incredible.
Yeah. Absolutely agree with that.
Absolutely. Well, we are at 4:00, and this was such an incredible live stream today. So much knowledge, so many tips that I personally learned so much, and I'm sure all of the people that were watching today learned so much. And as I said, we did have our hashtag today, Fund Women Startups, where I know a bunch of people were tweeting about it. And so there's so many resources that you'll also be able to read about. Again, if you are all interested in the Women's Startup Challenge and the Women Who Tech Hella Summit, I encourage you to go to womenwhotech.com, and you'll be able to learn all about it. And thanks so much for coming out today. It was so great to have everybody.
Thank you. It was fun.
Yeah, and thanks to General Assembly for hosting this.
Yes.